Now, Barclays is recommending investors buy bearish options on Union Pacific and Norfolk Southern, saying the shares may retreat as falling freight traffic erodes profit. Option strategists also say weaker economic data could add to investor concerns about how quickly freight volume will rebound. Joining us now for more on the Barclays recommendation and the options market is our own Jeff Kearns. Jeff, thank you for joining us today. What kind of trade is Barclays recommending here?
Matt, it's a simple one. They're saying to use a strategy called put spreads, and that's where you buy one that's below the price of the stock, and then you sell another one that's a little bit lower. And so when the stock goes down, you gain from one of them, but you also you have your profit cap. So it's kind of a way to keep your results in a range. And basically, they're saying buy the bearish options because these stocks probably have some downside in them because the economy is still a question mark, and that's a way that you can gain from these options if it doesn't turn out so good for them. And they have earnings coming up next month, so that's the catalyst that they're looking at. And they're talking about options in 2 or 3 months.
I'm going to guess, what factors make them bearish on rail? And we've heard already so many bearish things from Zara, who is going to kill me apparently, about freight. Is it the same problem that we're hearing from her about trucking that's affecting rail?
That's right. Well, they look at all kinds of things. They look at, I mean, transportation is a great thing to look at to get a gauge of expectations for the overall economy. But they're also looking at other things like, how much coal needs to be hauled around the country and stuff like that. And so there's just a question. The question that they talk about is overall volume for these railroads. How much freight carrying are they going to be able to sell in a slow economy?
All right, let's shift focus here. And it's interesting. I want to talk about Berkshire Hathaway options with you. They began trading on the CBOE. Also an interesting play on rail, right? Because Warren Buffett likes a rail company. But why is this listing unusual as far as the options?
This is, well, it's kind of unusual because it's never been listed before. But one thing that's unusual is that these are the Class B shares, which are a fraction of the Class A shares, which are $90,000 or something like that.
Right.
And so these trade at about $3,000, and that's not the typical price of a stock. And so when you look at these options, there's been a couple of trades today, a grand total of 53 puts and calls are traded, but they're trading at prices up to looks like $110, and so the options prices on these Berkshire options are more than a lot of stocks, so it's kind of unusual.
Warren Buffett may not be a huge fan of this.
Well,
I
wish I had the hotline to him, but he's made a lot of comments in the past about derivatives and that they're weapons of mass destruction and stuff like that. But these are a little different. These aren't.
Although he's got some.
He does. What he does is options on equity indexes, and these are options on a single stock, so it's a little bit different. But we'll see as things start trading. Nothing's really turned over so far, but I think people will watch it.
There hasn't been a lot of trading in these today?
Not much. Just opening contracts, so nothing's gone up or down yet.
Or maybe as they hear about it on Bloomberg television, they'll go out and start trading them around. A lot of people are not huge fans of derivatives, in fact.
Well, I am. They're lots of fun.
And you are, and we get to read about it from you. By the way, you can check out Jeff's stories on our website. If you have a chance, go ahead and check it out at Bloomberg.com. I think you can probably just search for Kearns with an S in the search box there.